I'd agree with Steve Leisman that it doesn't necessarily mean much, and it doesn't alter the course of Fed policy going forward. They're on track to taper. They're getting that substantial further progress on the unemployment rate in particular. And one note that Steve made, talking about the household survey, there was a decline of 710,000 individuals who were previously unemployed. So there's a real divergence between the non-farm payroll number and the household survey, the latter of which is much stronger. So I think the Fed will probably weigh that more heavily given the upward revisions we saw in prior months and start leaning into what appears to be some improvements. I've always thought, Tyler, that we had to get at least through September to get a real read on employment, and I think that's proven to be the case.
Jack, your thoughts here and what it could mean for the Fed?
Sure. I think the jobs report will tend to perpetuate that inflation narrative. We started to see improving job picture in the demand side, services, casinos, and restaurants. And then we saw job losses on the supply side, mostly in production and transportation, which isn't necessarily mean that it's not growing. It just means that they're certainly constrained. And so when you put that together, that does mean higher prices. It also means that employers, because of the participation rate, are paying higher prices. We saw wages go up. We saw the work week expand. That will tend to push that inflation narrative. So I don't think that this is going to change the Fed's view. What I do think, at least from as an investor, I'm going to take a pretty hard look at the consumer segment of the S&P as we go into earnings season. This is a very labor-intensive business that does rely on often overseas supply, and we'll see how that top line growth, which they fully expect, will translate, trickle down into the bottom line where margins could be hit.
Ron, talk to me a little bit about what I hear all the time with any merchant I speak to, with any business person I speak to. I can't find workers. Where have they gone?
Well, 3 million retired early. There's still over 1 million women who have not returned to the workforce. And Tyler, we've talked about this before. I think there's a massive rethink going on. I mean, if you're let's say a cashier at a grocery store and you see the 2 or 3 lanes of auto checkout, self-check, and they want you back for a little while, but you're looking at these numbers, you're going to maybe get a slight bump in pay to go back, but it's not going to be permanent. So I think people are thinking about reskilling. I think the pandemic has caused people to reevaluate what they're doing and what they want to do going forward. And it's funny, Jack mentioned Las Vegas, and I heard that some people aren't going back to work there. Now, the hotel that I stayed in for a conference earlier this week was at 102% of capacity. And so you've got businesses that are moving quite briskly, but still having trouble bringing people back, because I fundamentally think, aside from the first 2 factors that I mentioned, that people are really looking for longer-term, career-oriented jobs that offer some upward mobility as opposed to just getting a job that pays a minimum or less than living wage.
Shepard Smith here. Thanks for watching CNBC on YouTube.